Everybody, welcome back to the Cashflow Chronicles. Hot Chris, as you guys saw, was not on Finance Junkies either. He is in transit towards a wedding. He might join us, but it is unlikely. So unfortunately, you're stuck with me. So viewership is probably going to be down because nobody likes just Matty Moolah. But let me just send this link to Hot Chris anyway, just in case he decides to show up. For those of you guys that are interested in what we're talking about today, we'll probably hop into Rocket Lab. I talked a little bit about a video earlier. We'll also probably talk about Nike, which was down massively after hours. And we'll also probably talk about Carnival Cruise, which was up about 6-7% today. So all good companies to kind of look at in terms of being able to understand what the hell's going on, right? Instead of talking about just God knows what. There's a lot of opportunities to talk about in the market today. So I just want to take that opportunity to do that. I am still not certain if I'm going to be traveling home for the holidays, so more than likely I'll be hanging out here, so you guys can hang out with me as I likely am going to do some stuff and streams, meaning the rest of the weekend. I will also be signing off here at 10 my time, 11 other time, just to go to do Palantir Weekly. We are doing it with CodeStrap tonight, to be sure to check into that. And then last but not least, just specifically for those that are in the replay, be sure, if you guys wouldn't mind, to come in to Cashflow Chronicles TV and subscribe to that. That is where we are uploading. Actually, let me just share that really quick before we move on to Rocket Lab. Cashflow Chronicles TV, we're uploading our historical catalog over time. So if you guys are bored or working throughout the day, we are slowly uploading that. We've uploaded the first 3 or so videos, and we will be doing about 1 video a day. I'm still trying to decide if we're going to do 2 videos per day, but we started at number 1 here, number 2, number 3, and then we're also going to upload the all the current ones as well. So we're going to try to probably alternate with, obviously, the one I'm doing today. Maybe I'll push on Saturday just to give some opportunities for people to look at the old content, the new content, and eventually transition over to there. So appreciate the 307 people that have already moved over to Cashflow Chronicles TV and subscribed to that one. All right, but let's talk about something important. Let's talk about stocks. And let's not belabor anything else like that. Rocket Lab was up over 20% in after hours. It has kind of pulled back a little bit, but it was all the way up to $5.50 after market closed. And so people were probably sitting here wondering what the heck is going on, and appreciate those that don't necessarily follow the stock all too well, or they're just waiting for somebody like myself to come on and just let them know what the heck is going on with the stock. So in short, I made a quick 5-minute video, but in short, and maybe if we want to, we can dive deeper into it, maybe some of my thoughts about the investment thesis, etc. $515 million contract was signed with a U.S. contractor, specifically for stuff to go into space in the 2027 to 2029 timeframe. And it's about 18 separate vehicles that should be going into space. It hasn't necessarily been 100% concluded whether those vehicles will be satellites, if Rocket Lab will be using the Electron rocket to get them into space. It hasn't been entirely outlined, but what we do know, 18 separate vehicles were being used, and of that, 480 some million dollars is for the initial contract, base contract itself, and there's 27 million or something like that of options, I guess, on terms of delivery or something of the like. So really good for the backlog, considering Rocket Lab's fiscal year 2023 revenue will be just over 200 million. Next year, we're hoping to be around 400 million, but probably slightly less than 400 million for next year. But of course, that might change. So that overall, that contract is going to be pretty big for the backlog, and also just the continued dominance that the Rocket Lab folks are seeing in general. And what I mean by that is, and I've talked about this with Vincent Bullish, we do the Rocket Lab Weekly, It's like you have 4 or 5 main governments now that are truly entrusting Rocket Lab with their life, like with their contracts, with their ability to go to space. And Rocket Lab was awarded again this year, the second most launched US vehicle behind the Falcon 9 rocket. And so you have people evaluating all these other companies at $5 billion, $10 billion, but yet the Electron, the company that actually is sending it to space, is only rated at just over 2 billion to below $2.5 billion. So it's pretty funny, if you have two premier sort of launch vehicles. Granted, it doesn't launch at the cadence of a Falcon 9 rocket, nor does it have the payload capacity, but eventually in 2 years' time, we'll be probably there, and we'll be kind of on pace to be able to be in the tens of billions of dollars of market cap. And yet the stock here is trading at $5, right? I think that in short time, when people recognize the true potential of this thing, it should be a $10 stock easy. And eventually, I think it'll be a $10 to $12 billion market cap within the next 4 to 5 years. And I think in the long term, it's going to grow to 50, potentially even plus $billion market cap, which would mean from here, we're looking at a 20 to 25x just in this particular stock alone. So that's just my little quick thought about this one. These guys are launching 10 rockets per annum. Most rocket companies that are on the stock market, like Astra and many others, failed to launch a rocket, period, in 2023. So with that, I'll just kind of look at potentially seeing if anybody has questions on this one, and then we might move to Nike, which was down about 11 or so percent in after hours today. People are asking specifically, when is gap profitability timetable? I just don't necessarily know about gap profitability. I'm not really concerned about the gap profitability piece. I'm more concerned about cash flow break even to make sure that they're not burning a lot of capital. And I forecast that not fiscal year 24 will be cash flow break even. I think that that's asinine to think, but I think in the second half of next year, you will see one of the quarters be cash flow break even. And I think a lot of that has to do with the fact that you're going to have a lot of pullback with respect to the spending that is going into Neutron. And then with that, you're going to have more and more folks or more and more clients being shoved through 5-6 launches per quarter, hopefully. And then if weather allows, and then you'll also have the opportunity to have space systems ramping up as well. So I think overall, you're going to see a cash flow break even for the second half. Profitability, though, I think that that's going to continue to be tough because this is a capital intensive business. And so when you think about it, they're still adding factories, they're still adding a lot of other things. So with that, I think that they're going to be able to depreciate a lot. And when you have high depreciation, that impacts GAAP profitability. So when you're talking about a non-GAAP will actually be, I would say, 2 or 3 quarters ahead of GAAP profitability because of that reason, because you're going to have share-based compensation, which isn't much. It's like 10 million a quarter, so 40 million a year. And then you'll also have the drag from depreciation costs on GAAP net profitability. So I think that alone will probably be a drag of 3 quarters, 2 or 3 quarters before you actually get to a place where GAAP profitability is realized. And I think net non-GAAP profitability probably towards the end of 24, first half of 25. But I think a lot of that has to do with how much money you're throwing at all these guys. But I think you'll see, and that might just be being asinine or being super optimistic. I think we'll see a lot more ability to understand where the cash expense comes from Neutron in the first quarter, and also what a run rate looks like in terms of operating expenditures, gross profitability, just based off of being able to launch 5 or 6 rockets in the first quarter and having close to $100 million in revenue for the first quarter. So with that, I think that that's going to be where we end up with respect to understanding, where in fiscal year 2024 net profit will be, right? Will it be something that happens in that year at all, or is it going to be pushed to something like 2025? And I think that's going to be tough because of all the spending that's going on with Neutron. But I think a lot of people are always like trying to rush these things, right? The thing is they have capital on hand, right? $380 million, and they have the fact that they're about to get Neutron on the pad within a year's time. So in reality, all they have to get to is the end of 2024, early 2025, and then things will be smooth from a Rocket Lab perspective. And they'll be able to get a rocket on the pad, they'll be able to launch it. And then after they get a successful rocket launch, they can start to get all these different contracts for the Neutron rocket. So with that, I think it'll be a huge opportunity kind of going forward. So let's just hop into, unless there's any other conversations, we could always come back to Rocket Lab. But let's hop over onto Nike. And this is kind of a blind look as to what happened, but the stock is down. It was up about 1% pre earnings announcements. And then earnings announcements came in and it's down 11.5% in the after hours. So no bueno with respect to Nike. I think that I'm just curious what that actually ends up meaning in terms of the market cap. So we're at about 186 billion market cap. Price to earnings was already running pretty hot. So I don't know, considering, obviously this is for the third quarter because we're obviously in the fourth quarter right now and Christmas is right around the corner for next week. I'm curious what the heck happened to Nike earnings. So let's pull up Nike Q2 as they call it, earnings results. Why is not their slide pack opening for me? Let's see. Nike Investor, second quarter. All right. So why is Nike down this absurdly in this quarter? So Oregon, Nike reported fiscal year Q2 2024 results, which is our third quarter 2023. Second quarter revenues were up 1% to 13.4 billion compared to a prior year, down 1% on a currency neutral basis. Direct revenues were 5.7 billion, up 6% and 4% on a currency neutral basis. Digital brand was increased by 4%, 1% on a currency neutral basis. Wholesale was down 2% to 7.1 billion and down 3% on a currency basis. Gross margin increased to 44.6. Diluted EPS was $1.03, which was up 21%. And they're announcing enterprise initiative to accelerate future growth while building faster, more efficient Nike. And John Donahoe, president and CEO of Nike, and I quote, "Our Q2 results demonstrated how getting back on our front foot in our key areas of innovation and growth." Interesting. Not really a lot of growth there. This quarter showed strong execution by our team, as well as focus on our winning formula, innovative products, distinctive storytelling, and differentiated marketplace success. Got it. Nike's second quarter financial performance was a turning point in driving more profitable growth. We look ahead, softer second half revenue outlook, remain focused. Okay. So I'm curious what this means. So they give a forward look to their because I'm assuming their outlook is why everything was down because everything was kind of flat, right? They came in with about $1 of EPS, which to me that means the stock, it's running. If you force that out, that's going to be about EPS of. So let's see, investors, quarterly earnings, maybe investor presentations. Yeah. Nah, dog, don't send me to that. Give me the good shit. Sometimes I hate these websites. Like I feel like they need to make them easier. Dang it. Release webcast. Dude. All right. Well, here's the key financial metrics. We'll switch over to this. Sometimes I hate these things, man. Like sometimes it bothers me why they make it so complex sometimes when in reality it's so easy. So here's this revenue 13. So basically you can see it's a 1% change year over year. Year to date, so the first half of the year unchanged. Their margins kind of went down in terms of gross profit, but here they say they go up. Oh, the cost. Okay, so the margins go up because the actual cost is going down. Got it. That makes sense. So this is flat. So you end up with $1.04 EPS, $2. So you're running at about $1 per quarter, at least for the first half of the year. So $4 is probably what they make on an EPS basis. So to me, when you look at the stock, this is a mature boy, right? This isn't really growing massively. It's not like you're talking about like a Palantir or a Google or anything like that. Like this guy is pretty. It's pretty developed at this point, right? So for it to be trading at a 25 to 30x multiple is pretty rich. And I can understand a little bit why it's come down in price, especially when it was running at like 120, 125 before. That's pretty pricey, right? 'Cause let's just say it's 125. You divide that by 125 divided by 4. Yeah, you're looking at like a 31 price to earnings. And that's just a little rich for a brand like this, right? It's nothing too crazy. But I am curious, right? Everyone's talking about the poor guidance. I'm trying to find exactly where they state it. Maybe I brushed over it. Getting companies identifying to deliver. Let me share this because we already kind of talked about this piece. Companies identifying up to $2 billion in cumulative cost savings over the next 3 years. Area potential savings are product assortment, increasing automation, and use of technology streamlining. Got it. This is what the problem is, I guess. As part of this commitment, the company is taking steps to streamline the organization, which is expected to pre-tax charge about 400 to 450 million and largely recognized next quarter, primarily associated with employee severance costs. Revised guidance will be provided on the conference call. So here's the revenue conference call. And I assume somebody on the interwebs has to be giving updates. Wall Street doesn't love me. There we go. CNBC will definitely have it. So let's just take a quick look with this guy and see what they got. So Nike on Thursday unveiled costs $2 billion. That's what we just kind of covered there. Now expects full year reported revenue to grow approximately 1% compared to the update of mid-single digits. So pretty much where you're at is where you're going to be. So you're at about $4.10 EPS compared to maybe supposedly going up to $4.40 or $4.50. So makes sense. Nike expects reported revenue to be slightly negative as it laps through tough prior year comparisons. Sales to be up low to single digits in the fourth quarter. Last quarter provided guidance and highlighted a number of risks to our operating environment, including effects of the stronger U.S. dollar and foreign currency translation, consumer demand. This is showing macro headwinds, particularly in Greater China and EMEA. Interesting. So they expect gross margins to increase by 1.4 to 1.6. We saw in Q2 specifically, it was up 2%. So good with that. So I think overall, just that decrease, right, that revenue shrink is partly offset by that gross margin increase, but not fully offset, right? And so I think with that, you're gonna be troubled. Now, I know that attendance is low because I think Amit and Co are continuing for another half hour or so. And so with that, we'll continue. I'm curious to see what it looks like for Carnival Cruise, because those guys, let me just share that they were up today on, I anticipate, better outlook or performance for this particular quarter. So they were up about 6%. They ended up flat after hours. But it looks like the news, excuse me, came in pre-market this morning and was well received. So I'm very curious to see where Carnival Cruise investor relations looks like for us here. Carnival Corp. A year of momentum, strong bookings and earnings. Got it. So let's move this to sharing the screen about Carnival. So Carnival up 6%. So full year revenue hit an all-time high of 21.6 billion. Good. That is really good considering we're just a few years outside of the pandemic. So that's pretty good to hear. Full year cash flow from operations was 4.3 and adjusted free cash flow was 2.1. US GAAP net loss of 74 billion. An positive adjusted of net 1 million, outperform September guidance. The company made debt payments of 6 billion, reducing its balance by 4.6 from its peak in the first quarter of 2023, and ended the year with 5.4 billion in liquidity. The company entered 2024 with its best booked position on record for both price as well as occupancy. Now, what does this mean? I would anticipate that this GAAP net loss is associated with maybe some increases that they had to take on some of their restructuring of their debts as they kind of terminated old debt, maybe restructured into new debt, as well as just the fact that this is a very capital intensive business. So they have a lot of capital to put into service more ships. Now, when you do that, when you have a lot of ships, you can depreciate those over time. So even though the cash flow was 4.3 billion, that's the physical cash that they are getting in to the cash register. Then they are using some of that to pay down debt, and as well as using that free cash to then pay towards more debt or to pay towards dividends or pay towards capex, right? Or I guess free cash is after capex, right? So they probably used about 2 billion or so in capex. And the rest of the 2.1 billion was used for further debt paydowns or dividends. But that being said, overall, they freed up about 4.6 billion in debt, which is good, really good. And Chris kind of talked about this a few weeks ago when we talked about Carnival in the past. So this is a step in the right direction. Stock obviously up back above $19. So we'll see what they kind of have for more thoughts. So for the fourth quarter specifically, record fourth quarter of 5.4 billion with record net per diems in constant currency, significantly exceeding 2019 levels, which is important because really they started getting impacted in 2020 with respect to the pandemic, and above the September guidance range for record net yields in constant currency. Booking volumes for the 2 weeks around Black Friday and Cyber Monday reached an all-time high for that period. Positive to hear. Total customer deposits reached a fourth quarter record of 6.4 billion, surpassing the previous fourth quarter record of 5.1. And CEO Josh Weinstein, and I quote, "We ended the year on a high note with another record-breaking quarter, exceeding expectations and achieved full-year guidance of adjusted net income. In fact, we consistently outperformed in all four quarters of the year, buoyed by the strengthening demand environment across all our brands." Very impressive to hear, considering the environment that we're in. Rised interest rates comparatively to where we were in 2022. So as things get moving into 2024 and interest rates get cut, this looks like a potential to do well. Is it something I'd like expect to go to the moon? No, but it could be a turnaround play. I know it's not at $8 anymore; it's at 19, but I could see this thing going back into the 30s in terms of price. So let's look at the 4Q results. Net loss of 48 million expected, adjusted net loss of 90 million, and was above the range. Adjusted EBITDA, meaning the actual cash flow that came in before interest, taxes, depreciation, was 946 million, which was exceeding September guidance, and that's driven by strength in demand, higher ticket prices, etc. Record fourth quarter revenues of 5.4, record per diems above 2019 levels. Gross margin yields were down 4.6%. Interesting. Exceeded strong 2019 levels by 7.8%. Occupancy in the fourth quarter was 2023 was 101%. I don't know how you have that. How do you have over 101% occupancy? Okay. Curious about that one. Gross margins were down 2.3% compared to 2019, while exceeded 2019's by over 10% and 3 percentage points in the midpoint September guidance. Interesting. So I am curious, right? I mean, you're coming off of a record year for them. I think the real big problem that you see right now with Carnival is really their debt service, and are they able to continue to service and knock down that debt? You saw they were able to knock out 4 billion in this particular quarter, but this company, as we'll get to when we get to the balance sheet, has a lot of debt. And so, will they be able to continue to cash flow as expected? And because these guys are one black swan event from unfortunately having to declare bankruptcy, right? All that debt, right? So, I mean, they can handle some turmoil, they can handle some storms, they can handle some stuff, but a black swan event again. I mean, these guys don't have the liquidity right now. Maybe they have a little bit, but enough where they would be able to handle something again, like a pandemic. It makes it a little scary, right? So, in terms of next year, adjusted EBITDA of 5.6 billion, which is going to be over 30% growth compared to this year. Holy shit. Net yields, approximately 8% approximately 8% compared to 2023, with occupancy returning to historical levels and nicely higher net premiums. Continued strength in pricing, onboard spending, adjusted cruise costs, excluding fuel, up 4.5% compared to this year. And for the first quarter, they expect adjusted EBITDA of about 800 million, double than that of the first quarter of last year. They expect net yields to be up about 16.5% compared to last quarter or year-over-year quarter of 1Q, and adjusted cruise costs to be up approximately 9%. So interesting with respect to that. So talking about the financing and capital activity, which is something that I want to hear a little bit more about, because they have, as they note here, about $30 billion left of debt. So during 2023, made debt payments of $6 billion, ended the year with just over $30 billion of debt, which is $3 billion than we forecasted just 9 months ago. During our March conference call, and almost $5 billion off the first quarter peak. And looking forward, we continue to evaluate refinancing opportunities and opportunistically prepay additional debt. Furthermore, we expect durable revenue growth to drive increases in adjusted free cash flow in 2024 and beyond, which will be the primary driver for paying down our debt balances and our path back to investment grade. During 2023, the company generated a cash flow from operations of 4.3 and adjusted free cash of 2.1, making a significant contribution towards rebuilding the company's financial strength. During the fourth quarter of 2023, the company reduced its debt by another 725 million. In the full year, made debt payments of 6 billion, while ending the fourth quarter with 5.4 billion in liquidity, including cash and borrowings available under the revolving credit facility, being that 5.4 billion. In addition, the company amended an agreement with one of its credit processors, is now expects an additional 800 million to be returned during the first quarter of 2024, representing substantially all the credit card reserves balance as of November 30th of 2023. So that's pretty badass. I'm not going to lie. It looks pretty effing good. That's probably why the stock was up so much, but I'm kind of curious. Do they provide the cash flow statement here? So they have operating income, operating loss. I'm just looking for debt. So here's cash. So they have about 5 billion in cash and cash equivalents, property. So here's what they're talking, like they're the property and net equipment, like it's going up, right? They keep investing. Current liabilities, deposits, long-term debt of about 28 billion and long-term debt, which is down from 31. So positive progress there. So they are doing a good job with this, right? But I'm curious when a lot of these debt obligations are coming up, right? So let's see. Non-GAAP. I don't care about that. Let's look at the cash flow. Where's the cash flow? What's this? No, I'm curious about the cash flow statement guy. Okay, cash used in operations from or used. That's the 3 months, so 12 months. So they made 4.2 in cash flow from operations. They stated capital expenditures 3.2 billion. Right? I mean, they're adding ships. Like this is part of the problem is that they're adding a crap ton of ships, and so with that, you're going to be able to depreciate a lot of that. So, like if you go back to the net income statement, um, where is this bad boy? So this is non-GAAP. Let's go to GAAP. Look how much additional stuff you have on the GAAP income statement comparatively. So you have total revenues. Let's just do the fiscal year. So 21, 22 billion. And those revenues, the operating expenditures was about 19. You have operating income about 1.9, but then you have interest of about 2 billion. So that's a big whopper right there. 2 billion in interest. And then where do they have like depreciation and stuff like that? Depreciation and amortization. 2 billion in depreciation and amortization. Like that's crazy. But I mean, that just goes to show you, like they're able to write off a lot because they invest a lot. So, and they're basically probably have a set rule of how much they can per annum write off of one of those boats, and so they're probably just getting rid of their old um, fleet, right, to be able to help with respect to what's the word I'm looking for? It's basically like for those of you guys that don't understand, like the depreciation piece is not. It's one to kind of give you a tax break because you're investing, and it's like you don't want to be penalized for the money that you're investing, right? So they give you a little bit of a tax break to write off some of those things and allow you to kind of depreciate it over time. So that way you can get a little bit of a tax break every single quarter and you're kind of incentivized to reinvest back into the business. And so for like real estate, it's a prime one and people talk about it all the time. For residential real estate, it's 27 and a half years. For commercial, it's like 30, like high 30 years for commercial real estate. So, um, so yeah. So that's interesting. Some interesting ones to kind of look at. I'm kind of curious if you're looking at from a cash flow from operations perspective, um, going back to Carnival, and then we'll kick it over to some questions because I have about half an hour before I have to move over to Palantir Weekly. So you have about $24 billion in market cap associated with Carnival Cruise. Now, you made about four billion in cash flow from operations. They're they're expecting 5 billion from cash flow from operations next year. So if you think about it from that perspective, you know, your price to cash flow from operations is like what? Let's just do the numbers. I'm not good with math. You guys know that. So let's just say 24 billion market cap divided by 4.2 is about 5.5. And then if they really get 5, did they really say 5 billion? 5.4 billion is what I remember. Was their forecast for cash flow from operations in 24? Let me see. Carbon intensity. Oh, they expect EBITDA of 5.6. Net yields. Okay. So they'll probably end up about the same, 4 to 5 billion in adjusted cash flow from operations. So with that, I mean, I'd be surprised that this thing doesn't continue to do well, especially if they're able to continue to pay off all the debt. Um, so there's that. But let's go to the top. Let's see if anybody has any questions, and then we might shut her down early, just so I can go and get prepped for Palantir Weekly. But what's going on, Johnny Mac? Hopefully, I was able to answer your question on Rocket Lab earlier about gap profitability, and I think I did just based off your notes. Hot Mike, what's going on? Crossroads, good to see you again, my amigo. John Blake, what's going on? George from the Money Gang, what is going on, my guy? Good to see you as always. Sam Chang, what's going on? Did you hear about Rocket Lab? I did. I may or may not have heard about Rocket Lab, and I'm very excited about it. The first 10, 15 minutes or so, we talked about Rocket Lab, specifically about the $515 million contract, the 18 different vehicles that'll be going into space in 2027 to 2029, and potentially all the way out to 2033, they said. So very excited to see what happens with respect to Rocket Lab there, and specifically around the fact that revenues this year about 200 million, maybe slightly above, and then in fiscal year 24 they should be below about 400 million. So that's over a year, just one deal, over a year's worth of current backlog for these guys. But they said work is going to start immediately, so I don't know how that's going to help with boosting current revenues. Maybe it'll help in the shorter term. So we got Junebug as always. What's going on? You dislike Carnival Cruise, inherited shares with the cost basis of 22, and I got tired of holding it and sold around the bottom. It didn't see how they could overcome the debt and high gas prices. I don't blame you, right? I'm pretty surprised that they were able to turn it around, But I think they also have a good brand associated with it, right? So I think that's why they were able to hold on. But a few more quarters, a few more quarters, and who knows what would have happened if the pandemic kept going. Anything you looking at but you haven't pulled the trigger on? Is this question towards me or is this towards Junebug? Matt, your videos from 2 years ago showed up in your feed about my portfolio updates. Yeah, I stopped doing the portfolio updates. It's kind of funny. A lot of people, I guess it's because of jealousy or just the fact that they don't believe it's the truth. They think I make up the numbers, right? As if I've been able to consistently do this now for 5 to 6 years and just continue to keep on this lie that the portfolio is what it is. So it's pretty funny when those things come up. But yeah, I stopped giving full portfolio reviews for myself, probably the early 2022 timeframe. So it's probably been about 18 months, because it was right around the time where I hit a really, I guess, most people would consider a pretty significant net worth milestone. And after I got to that, I kind of was just like, well, what's the point, right? And everyone was saying that it was a lie anyway. So I was like, you know what? Why even show the number anymore? So I used to put the number all in the spreadsheet, and people would always just be like, that's fake, it's a lie, Matt. And I'm just like, you're right. I want to spend so much time just trying to convince everybody of something rather than, and do a shitty job doing it, pretty funny. Because if that was the case, like why wouldn't I say I have like $18 million or something like that? Like there's so many other people on YouTube that do so much better. Always looking to bought some more ETF MLPA. They based on Matt's show last night on energy transfer. It holds 25% ET. The ETF has doubled for me in the last 3 years while giving. What else is say? 7% dividend yield. Problem with some of those master limited partnership ETFs, though, is like what garbage companies. Maybe I shouldn't say this. Do they hold garbage companies? Because like these sector ETFs, man, you really got to be careful because they'll be like, oh, the VNQ ETF. It's like, huh, what kind of companies, right? And it'll end up holding 25% junk, and the other companies, 75 companies might be okay, but you're still holding 25% junk. And then you're wondering why you stay flat or it doesn't actually perform as expected. And then there's a reason why, the S&P 500 does really well. It's because they get rid of the crap every year. So I think it's pretty funny when people will be like, "Oh, energy's down, or it's about to go down. Let me invest in these energy ETFs." And it's like you're also investing in the companies that are on the brink of declaring bankruptcy when you invest in those ETFs. And I think everyone just assumes that, oh, I'll just invest in these sector ETFs is the right thing to do. And it's like, you really have to be selective, right? And understand. And that's why it's like sometimes you really have to think about what you're putting your money into. And actually, funny thing is like I made some significant progress on the book yesterday, and I was just doing some research. And with that, a lot of the things that I say are just like blatantly open out on the internet. Um, as to like why people underperform, and why people quit early when they're investing, and raw emotions as to why they think that, and a lot of it's like overconfidence, stuff like that. So I was just like kind of believe that I'm not this like talking head that's just spouting off at the mouth. It's like a lot of this is well documented as to why people underperform the markets and everything of the like. And hopefully, when that book comes out, I get a few people's perspectives with it. And depending on how much progress I make, anyway, that's a different story for a different day. But it turned out pretty good. I got a lot of pages kind of pre-written down, and it's like up to 24, 25 pages of ideas. And I don't want it to be a long book, right? Like I prefer it to be a shorter book, just with well thought out. People can kind of create their step-by-step plan as to how they want to get their lives in order. And I want to help while they're reading the book to like collaborate with them to create it. And so it'll be a lot of fun. But I was just surprised to kind of knock that out along the way. But in there, I think a lot of times it's like people just have this blanket wish to just like quickly invest and not have the appropriate plan. And I think that that's where a lot of people end up getting burned overall. Plan to buy some shares of Google thanks to you and Chris. Why? After it's run up 40%, 50%. Google's a good one for the long term. I guess I would just say, how long do you plan on holding, right? And understand that, because we've been talking about Google. I've been buying Google and preaching it for the past year and a half. Well, a year and a half is probably not the right term. Year and some months when it was down in the, you know, low 80s, sorry, low 90s, high 80s, and picking it up. And now people are just starting to buy into it, right? And it gives me a little fear. It's just like, it's like you see people come out of the woodwork when the market's doing well, and it's just like when they're like, there's so many common sayings that people should like buy low, sell high, but it's like people regret, and just like it's like so much emotion. It's like you got to get rid of the emotions. The market doesn't give a shit about your emotions, and I just sometimes it just boggles my memory. Like it didn't take me long investing in the stock market to realize like if you're buying, like make sure you can lose that money, or like you can afford to lose it. Um, and just it's every time, like even people that I work with, it's like I've seen them go through the cycles too, in late 2018 when things pulled back, and late 20 or mid 2020, in 2022. It's just like I've seen sometimes the same people make the same mistakes after me, and they're like, I just don't understand how you do well in the market. And I'm just like, come on, man, like you have the tools, like people tell you it's, and I just think that so many people turn their ears off because of emotion, overconfidence, or just like lack to put it in an effort or plan. And it's really sad. I really hope people change that way about their investing community. So you were talking to June, but you wanted to know what I thought. Are you looking at anything, but I haven't pulled the trigger on? Not anything particular. For now, I'm just thinking about, getting a little bit more of a cash position. And to me, like that's just not. It's not like I'm thinking the market's going to tank or anything like that. It's just I've invested so much because the market's been so down that it's going to be hard for me to really just like keep 100% invested like I had been. Um, I'd like to get closer to like a 5% cash position, but that's lasting a lot. And I'd probably get it down to like a 2 to 3% if interest rates go closer back to zero, which I don't anticipate, but it would just be nice in case anything comes along from a real estate sense, considering I'm not at the place yet where I'm dividing the portfolio 50% real estate, 50% equities. It'd be nice to, if an opportunistic thing came along in the next 2 to 3 years, to have a little bit of cash to be able to deploy. Not stock related. I want to check out cell phone plans. I'm not sure if I want to stick with Verizon. Everything is spendy. Interesting. They're not cheap. They are not cheap. Yeah, things are not cheap. Don't get why anyone want their money in the cruise ship industry. I can hear that. They're probably get companies. Don't know what that means, but don't deserve capital compared to Apple, Google, etc. I think a turnaround play for a swing trade. I personally am probably going to stay away from the cruise industry myself, but some folks, meaning Chris, is probably going to look at it as a swing trade. If you're going to make up a portfolio value number, always make it comically small, so people are like, "Wait, what?" Exactly. That's why Chris and I started with the personal portfolio metric now, which is like, I don't know, $1,000, $1,060 or something like that. Apologies if you answered this already, but in your opinion, do you think Rocket Lab's new contract will negate having to raise extra funding going forward? I don't think that they need to raise extra funds, and they've stated it explicitly in their 10Qs. And I don't understand why everyone is immediately jumping to the fact that they need to raise money. They still have $385 million in cash on hand, and they're getting closer and closer to profitability. Like, I don't understand why everyone just continues to just assume that they're going to do this. Now, what I am curious about is there's $100 million that they've been paying in terms of fees. So let's just get rid of that $100 million. Say they pay back that and they just go off the cash. Right now, in terms of within the next 12 months, what debt do they have in terms of obligations that they have to pay back? Not lease obligations, but strictly debt. That's pay back $100 million, of which they have $385 million in cash. So that leaves them with $285 million in net cash position, not net debt, net cash. So even if you were to remove that, which I think that they'll probably roll that, most companies hold debt. Like, you realize, like Google, Amazon, Apple, most companies hold debt, right? And that's okay to hold debt. What they're probably waiting to do is not refinance it today, one, because interest rates are higher, but two, they have until July of next year. They can establish closer and closer to profitability. They can establish closer to closer that a neutron vessel is in the works and it's not going to be a cash sink. All things are capital exposure risks that will get mitigated over time through actions and clearances. And that means that instead of charging, let's say, an 8% interest rate, they get a 6.5% interest rate. So all things like that, right? So timing is key. And they also noted that Spice announced that they were trying to get some things noted and contracts noted by the end of the year. Maybe that was specifically this $515 million contract that they just announced with NASA. But to me, I just think that the proof is in the pudding, right? Like, Astra's going belly up. You have all these other companies that are going belly up. They don't have money. Rocket Lab has money, and everyone's still worried about liquidity and like their ability. It's just like they have $385 million effing dollars. Like, I don't understand why this is a constant concern for people. But I don't know. Maybe my confidence in the organization is just way more. Maybe I understand that they're only burning most of the time $20 to $30 million a quarter. This last quarter was an anomaly quarter, just based off of high expenses that they had to pay for Neutron. But after this, I don't really expect them having to pay so much capex. Um, but hey, maybe I'm being too optimistic. I've been known to be an optimist in the past. So, what do I know? What do you think about QQQM and SCHD as a combo? So, QQQM is better if you're just like somebody that doesn't like to write options at all. QQQM is slightly better than QQQ by a very thin margin. I think QQQ, the expense ratio is 0.2% per annum. QQQM is 0.15. The thing that makes QQQM superior is that expense ratio. Liquidity, in terms of being able to write options and stuff like that, just throw that out the window with QQQM. So if you write any sort of options, QQQ is the one to go with. SCHD, it depends. It's overperformed in the past. It hasn't overperformed this year. So to me, if you don't need the extra dividend yield, then I would stick with just like a SPY personally, and just write covered calls. That's personally, right? So do things for yourself. But about the QQQ part, I do TQQQ, so I get it. But I also don't know like what other things you're investing in. But the thing that bothers me a little bit about Nasdaq 100 or the Qs rather than specifically SPY is like the concentration to technology is just astronomical for the Qs, and that can be good or bad. But I think it'll be good for the next year or two, personally. But in times of rough, it'll be worse than the SPY. And I guess it all just depends on, can you handle the volatility when the volatility gets bad, you know? Um, so, but like I said, I'm talking out of both sides of my mouth with respect to that because I have TQQQ in my portfolio, which is triple leverage Nasdaq 100. But SCHD, like I've just noticed that some of these high yielding ETFs or higher yielding, this isn't really high yielding, but higher yielding, can sometimes have these periods of lull, even though you wouldn't expect them to. And they've also made some like SCHD made some questionable moves um, in the beginning of 2023, like really questionable. Like I was really on board and I understood why everyone and their mom was talking about investing in SCHD. And then they invested in some weird stuff. Like they switched out some stuff that I wouldn't have switched out, and they brought in some stuff that I was just like, really? And I can't remember verbatim, but if you look at the list of companies that they pushed out of SCHD and they added, you'd probably sit there and scratch your head, like, why are they doing this for 2024 and 2023? One of the YouTubers that don't pump and feed you BS. I mean, I pump, right? Like, but I try to provide some risks. Like I'm not how do I say this? I don't try to clickbait people or get their emotions, and like I try to just be straight up, and I try not to just say like Palantir 100% of the man. And I do it in jest, right? But when it comes down to like talking about it, I also present the negatives versus some people are like, don't talk, we're not talking about risks. Like, don't talk about risks. We're here to pump the numbers up. Don't talk about the risks. So it's pretty funny in that respect. Some folks straight up just, man. And sometimes I watch some streamers and I just get more and more upset over time. It's just like, dude, like you're here literally they're worse than CNBC and stuff like that, where they're jumping back and forth. They were like, oh, I hated this stock, now I love it. They're trying to get the like emotions out of people. They're literally trying to sell you the advertising. It's like, I'm not here for the money. I'm here to hopefully give back to people, because 10 years ago when I started investing, there was literally shit on YouTube to follow. And eventually you had people that would come around. Some of them were kind of scam artists and some of them did really well. And some of them I believe to this day, and have met a few of them actually, believe it or not. And which has been really kind of cool, considering I've been around now on YouTube for 5-6 years at this point, creating content. But yeah, it's you really have to be careful. You really have to use your judgment. But that's part of the reason why you're watching this, is because you don't have good judgment yet, and you're trying to hone that skill. So honestly, getting worn out of the market when it goes up with an upward run, I get nervous for waiting for something to start breaking. Well, I guess you just have to stick to your guns and plan, right? What's the goal? Capital preservation, like going back to the book, right? And I don't mean to do that, but like I was reading specifically, I was like, oh, maybe you're towards retirement, right? And it's like the research I was doing was specific around capital preservation, and I think it's perfect, right? It's like, well, what are you investing for, right? What's your objective? Is it capital preservation to make sure it doesn't just disappear? All these key things that are truly important for you. Is it to keep yourself alive, or is it to like eventually hand off to the next generation of people? How much money is it, right? Because you might be worried about the capital preservation piece, but let's just say it's $10 million, and that $10 million, if you just invest it at a 2 to 3%, you're going to be looking fat, dumb, and happy, and you really don't have to worry about, let's just say, all the small things that you're kind of worried about. Like you'd be getting $200,000 a year in income from it regardless. So, you don't necessarily have to worry so much because you're already making that money and it's going to sustain. So worry about setting up the right opportunities for charities to be able to use that money if you so do it, or set it up in a trust for your future generations if that's where you. So it's like, really, I think that 80% of the work should be going into the planning and strategy rather than what stock it is, right? I think if you take care of the little things like that, the big things like what stock to invest in will take care of itself, you know. The market can remain something about something longer than you can remain something. The market can stay solvent. The market can be irrational for longer than you can stay solvent, or something like that. Yeah. A pullback is obvious at this point. The only question when and how much. It's not obvious. I mean, it could continue to go on another 5%. Could very well. Um, could very well. I've been chatting with more and more folks that say that PFE is a no-brainer. Steven, we had on the channel last night, he said it's a no-brainer. TJ, the Wheel Deal, says it's a no-brainer. Chris and I, when we get a chance, we'll look at it. The net income went negative, right? That scares me. I don't know why. When you're a company that's this old, so there has to be some sort of write-downs, whether that's the value of goodwill or something like that they wrote off on their balance sheets. I just need to know why, right? So I don't have an opinion right now. My opinion is that I don't know. My opinion is that it seems cheap compared to where it was been or has been over the last 20 years. So I wish people luck. But Chris and I, me specifically, I can't speak for Chris. Maybe he has done some DD. I personally have not done my DD on it as of yet. June Bugs pulled a little bit of her money. New opportunity, still getting 5% on the money market. Exactly. It's different these days, right? It's not 0% interest rate anymore. Cash is saying get risk-free returns while you can. Exactly. I don't think that that's a bad plan. 20% of the revenue added to Rocket Lab. I don't know what that means. Electron Neutron will see a heavy rocket called Proton far out, I wonder. I don't know. Any stock that's in the buy range for me right now? Things that are still inappropriately valued. Next Decade is one that I'm starting to ravage up a little bit. I think Rocket Lab is still honestly cheap here as well. If I had more cash, I'd probably buy it. But right now, I'm just trying to get everything in order, trying to get my cash up a little bit because I just bought the house a month or two ago, and with Christmas and all these things that I've been buying for the house, I'm just trying to get that in order for now. Maybe in early 1Q, I'll have a lot more money to deploy. Matt already knows this, but the most fundamental question any serious investor needs to ask themselves is when Lambo? And that is the most important question. I pump and hold. I pump and dump. You know what I mean? Anyway, different story for a different day there, if you know what I mean. So cheers for clarity on Rocket RKTL finance raise question. Just tired of hearing all the ongoing narrative. Subject closed. Many people bring it up. Many people. Good talk. You like it. Appreciate you stopping by. Can you talk with Chris to see if you can do a uranium episode soon? Yes. And if you guys have specific topics, I'll probably leave a chat. And I have to run over to Palantir Weekly for you guys as well. If you could leave in the comment section here or message me, DM me on Twitter, please do so about things on a weekly basis that you guys would like to see. And that would mean a lot to me because I am looking for just consistent things that Chris and I can talk about on a pretty regular basis um, that we can probably schedule in. Right? We talk about the ticker, which the SPY kind of held up today. Palantir's down, Google's down, or Google kind of held up. Amazon's still on a little bit of a tear. Bitcoin's up to 44,000. All these things. We talk about some of this stuff pretty regularly, but I'm curious to see if there's segments on an annual basis, weekly basis, quarterly basis that we need to touch on. We do the earnings. We have the key stocks that we look at. We'll talk about those. But uranium is one. And in June, I don't know if you ever looked at the backlog of videos that I have on the Matt Money channel about uranium. It's not about pumping the stocks that the guys were there for, but I have some CEOs and we talked about it. And it might give some insight. It maybe not be the most recent news now, but I had some stuff in 2022 and early 2023 where we talked about uranium. So I'm curious to hear what your thoughts are on that one. And feel free to reach out to me on Twitter, or you have my WhatsApp as well. So just message me on WhatsApp. Monster review of the balance sheet. Let's just see. Took some small gains, but put them into CLH, WW, Rocket Lab, and some in cash. Can't complain with any of those. What's your choice of stock for natural gas? I have a long-term approach to natural gas. I have most of my money in Shell. I would say natural gas also is in company stock for undisclosed oil company, the one I work for. But with that, I have to run to Palantir Weekly. So as always, appreciate you guys, and I'll catch you next week on Cashflow Chronicles. Maybe tomorrow, Saturday, I'll do my own personal episodes on the Matt Money channel. Be sure I left it in the chat box here to go over to Cashflow Chronicles TV. Watch there. We'll be uploading all of our backlog, as well as this video will rerun over there as well. And I'll catch you on the next stream. Cheers. Talk to you guys later.